Ira Epstein of Linn Associates with your morning flash update, and this update is for Wednesday, and we're now at the 11th of August, 2021, 8:20 in the morning. Well, as you can see, the stock market's up. It was down if you were watching this market about an hour ago, and it has reversed course as the CPI number came out. I'll show you that in a moment. At the same time, you're getting a bounce in the gold market, the silver, the copper. Everything's coming up at the expense of the dollar, slipping back a little bit. Energies are still down, and the weirdest thing went on. President Biden's administration today is calling on OPEC to raise oil production. Now, let me understand this. We have stopped the Canadian oil from coming to America through a pipeline, an easy feat. We don't need the Saudis and Russia to be our friends with all that. But yet, he's calling on them. That doesn't help green emissions, does it? It's the gasoline price that he's trying to control, and that problem is obviously one of, when's the last time the U.S. built a new refinery? Do you think they're really going to build any more with electric cars and all coming in 5 years? So probably not. So the cheapest way would have been to bring in more oil from our neighbors. Pretty simple. I'll let other people deal with that. It just doesn't make sense to me. In the grain market, a nice bounce this morning, but folks, this is the pros probably coming out of the market, getting ready for the morning, and that's tomorrow's USDA supply-demand report. Now, here's why this is so important. We're going to get a new way of trying to figure out from the government, they're employing this, taking weather into account, satellite imaging, and so on, what the yields and the acreage looks like. This is going to be a serious number that we get. It certainly will impact corn more than beans, but beans being as volatile as they are, they can go anywhere on that number. Bonds and notes, you're back to the 134 area in the 10-year note. That's up quite a bit. Remember, we were 112 just recently, so that's 20 basis points higher. That's quite a bit of a rise that the market has seen. You're getting hit in the nat gas for the first time in a long time. That's down $10. Let's go to the mortgage market index numbers. A lot of activity did take place as you were down a week ago with those low rates. The price slowed down as the market has come back a little bit. But here's really going to be the headline. This CPI number is not a hot number. This is what the market was looking for. I'll go to the bottom. Year over year, 4.3% is what they got. They expected 4.4. The prior was 4.5. So year over year, it's not getting out of control. The headline month over month number is up 0.5%. That is exactly what was expected in the market. Food and energy up 0.3. You can see what the markets are doing. CPI energy index, well, we know that's been coming up, so not a surprise there. So the question for a lot of people is this going to force wages to go up to meet inflation, or is this what the Fed thinks is the transitionary part? If you try to extrapolate that, you're going to get a high number. But that's not what I think the pros should be doing. The question is, it's no longer at that big bump we had in June. It's slipping back into a range that the Fed and the market expected. Is it going to slip a bit more? That is, to me, the question on the market. At 9 o'clock, this is going to be another good number we have to look at. The July online help wanted index. You know, so far we've seen the online help ads are larger than the people taking the jobs. Now, what's that going to do?